Hey everybody, what's going on? It's James here. Wanted to shoot a market update for you. It's August 10th, just before 8:30 a.m. Central Time, and the market is looking it's looking good from a bear standpoint. Now, if you're a bull, it's probably not very fun this morning, but this thing is playing out fairly close to how I expected it. It's not going down as fast as I would like to see, but we did have some downward movement. So I want to talk a little bit about the market. Also want to talk about a couple of lessons that I've learned over the last few years trading. And in fact, we're going to start with the lessons and then we'll jump into the actual charts. So over the last week, I've got pretty brutally beat up for my bearish views. On social media, there's been a lot of people who have disagreed with me. Some of those people I actually had a lot of respect for up until this week. And seeing how they reacted when I disagreed with their bull posts really spoke volumes to me about those people as traders. One of the things that you'll notice about traders, especially the very, very successful ones, they don't tend to have a lot of arrogance, right? The more arrogant traders tend to be the ones that are playing with smaller budgets, or they tend to be the newer traders who, they get a couple of wins and suddenly their ego gets out of control. But if you talk to traders who have been trading for 10, 20, 30 years, they typically tend to be very humble people who will tell you that nobody knows what the market's going to do. So when you see somebody, claiming to know what the market's going to do, or, for example, making fun of people who disagree with them, that's a telltale sign that that person may not be somebody that you want to follow. So that actually happened to me this week. One of the guys that I had a lot of respect for, I thought he had made some pretty decent calls overall the last few years. He made some major mistakes in this rally. He was actually calling tops at 6,800. Didn't hold that against him. It was an analysis. He was wrong. He called for a new all-time high this week, and I posted a chart that disagreed with him, and next thing I know, this guy's attacking me and saying that I'm the type of person that's going to be buying in at all-time highs, and instantly I lost all respect for that person when they did that. So that was just like one of those things where it's like, okay, this guy is way too confident, way too arrogant, and not somebody that I really want to follow from this point forward. And the reality is when you get overconfident, you develop a massive bias that can really wreck you. And, he was long. So he had actually posted a chart just an hour before this happened, basically making fun of people who were saying this time was different. In other words, every time these triangles that come in on this rally, they tend to break to the upside. So he was basically poking fun at people that were saying this was going to break down. And, of course, we all know what happened. It actually put in a massive, about $600 candle going down, right? This was a 5-minute candle that dropped the price of Bitcoin by nearly $600. And you might say, James, it's already going back up. It is. My opinion right now is it's a dead cat bounce. I'll get into that in just a second. But you can't be arrogant. So that's number one. Number two, the other thing I want to talk about is once you start trading and doing your own technical analysis, be very careful about letting other people change your mind. All right. Long story short, I actually did call the market top in December of 2017. I did a video on December 7th. Price was around $17,000. I said that I thought it was time to sell. I took a lot of negative feedback on that video. In fact, I think I even took it down. I can't swear to that, but I think I took the video down. I just felt like I was an idiot for even thinking such a thing. And I ended up not selling my coins, and then I got caught when the market dropped about 40% a few weeks later. And that was my fault because I let people, basically talk me out of what I had figured out. And I let other people's opinions sway me. I basically defaulted to their judgment over my own. So it's very important if you're going to trade any market that you rely on your own judgment. It's okay to take other people's views into account and say, okay, let's look at this objectively, but don't default to other people's judgment, because point blank, it's not their money on the line. When you make or lose money, or when you risk money, they don't actually care, or they may care, but it doesn't affect them personally if you make or lose money. It's very, very easy for somebody to put out a call or for somebody to put out a chart and say, I think it's going to do this. It's much more difficult for that person to actually put their money where their mouth is. Always keep that in mind. All right. So with those two things being said, let's talk about the charts and let's talk about what's happening. As much as I'm a bear and as much as I'm happy to see this go down like this, there's something about this that actually does concern me, and it's the fact that the CME market is closed. So the CME market actually closed up at $11,945. So the reason that's a problem is because if this closes much lower today, and of course there's still 11 hours left, but if this closes way down here, that's going to create a gap in the CME market, and it's going to create a gap in a bullish area instead of a bearish area. It would create a gap somewhere in this zone here if it doesn't go back up. And of course, we all know how I feel about gaps. They need to fill. So that makes me a little nervous, right? Depending on how this thing closes out the weekend. Lots of time left. Lots can happen, so I don't want to get too ahead of myself. But it could be that we end up bouncing off support down here around 10.8 and then going up to fill this gap and just continuing on up and never go back down. So that does make me nervous. That's not actually a good thing for a bear. That's kind of a bad thing. But we'll see. We'll see how that plays out. All right. The chart right now, let's take a look at a couple different charts. These lines here, these are our long-term trend lines. These are going back to 2015. 3 different trend lines basically that we can keep an eye on. This was the ultimate bottom down here. We can see this one act as resistance / support. And then this one is the one that I've been keeping an eye on, this top purple one. And you can see that we actually did just run into it this week and got rejected very harshly. That's a harsh rejection, setting it back down several $100s, almost $1,000. Okay, so we are still under the long-term trend line. It is acting as resistance. And then, of course, our shorter-term trend line from December of 2017 through now, we're also still under it. Now, whether we stay under it, tough to say. But there's a lot of resistance up through this area. So I'm still bearish, okay, based on the trend lines. I'm still bearish based on the total market cap. Let me pull that up real quick. Oh, goodness, too many charts. Okay, so this is our excuse me, not market cap. This is the Bitcoin dominance. All right, basically, Bitcoin has now broken into ridiculous territory that it hasn't really seen since back in middle of 2017. Its dominance reached up over 70%. And what we actually have here is this is a rising wedge, and rising wedges tend to break south. Okay, now 2 things could happen. It could be that Bitcoin starts to lose its dominance because alts start to pump. That would be basically like an alt season. Or the other thing that could actually cause Bitcoin to lose its dominance is Bitcoin could actually crash. So either one of those are possible. This doesn't necessarily mean that Bitcoin is going to come down. It could just mean that alts start to pump, which would make a lot of people very happy that are holding alts. And then, of course, the third opportunity is it could absolutely just say, you know what, I don't care about your TA. I don't care about your analysis. I'm going north. And it could break north. And if it breaks north, we're going to see a continued bleed out of the altcoins, which would be bad. Okay, so we've got that going on. We have, let's take a look here. This is our bigger descending triangle I talked about a few days ago. This is the triangle from December 2017 through now. Obviously, a very large descending triangle. I don't necessarily think we're going to bounce off and go all the way down here, but we certainly could. So still keeping an eye on that. This is a chart I put up yesterday for somebody talking about parabolic trends. So basically, when you get these parabolic rises like this, the general rule of thumb is they're going to retrace back down to about the 80% level. So in this case, that would have been somewhere in this purple box. And you can see that the market did indeed retrace back down to that level. Now we've been in a new parabolic trend since December of 2018. And you can see that we have broke that trend now. We broke it actually a couple of weeks ago, nearly, well, over a month ago now. We actually broke out of it. Now this is one of the things I haven't talked a lot about in videos, but it is one of the reasons I've been so bearish, because typically when you break out of a parabolic increase, you're supposed to retrace down to that 80 level, which in this case be right down around $5,200 to $5,300, right? Again, a lot of people right now are saying that's impossible. It's just it could never happen. But markets like to prove people wrong. They like to do what people think is impossible. So I'm still watching that level with some interest. Let's take a look at another chart here. This is our descending triangle. I thought I had another chart pulled up. I apologize. I don't have it. I'll have to make it real quick. All right. So what I'll do is I'll just get rid of this line real quick. We are still in an obvious downtrend. And I know people don't agree with me, or a lot of people don't agree with me, but to me this has always looked like a downtrend, and I'm trying to find my tool to draw this channel. Alright, here we go. So if we draw this, this to me is not an uptrend. I know people think this is an uptrend because we have this huge bounce, but you can see now we are getting what is going to end up being a shooting star candle on the week. This is a weekly chart. We have about 36 hours or 35 hours before the close. If this closes much lower than this, we're going to get a shooting star candle, which is basically like a lightsaber from Star Wars, right? And that is actually a bearish signal. And then if we turn around and we put in a large red candle like this on the other side of it, that's actually going to be what's called an evening star. And an evening star is an extremely bearish 3 candlestick pattern. So again, that is what I'm looking for. That's what I'm, that's where I'm quote unquote placing my bet. Is I'm still short at this point. I'm not going to say that I expect it to happen, because you just can't expect anything with cryptocurrency. It's too volatile. But if it does put in a big red candle right here next week and take us back down to these lows, it's very likely that the scenario that I've talked about over and over again plays out, where we do go down, fill the lower CME gap, test this level at 7,500, and then from there it's going to be interesting. I published an idea over on TradingView a few days ago, and this is the 3 peaks in a domed house pattern that I talked about in a previous video. And basically this is what, ideally this is what I would like to see happen. I would like to see price retrace back down to that $7,500 level. I would like to see it bounce up to around $9,000 level and fail as it tests this resistance here. And then I would like to see it go down to the $5,200 level and consolidate. And that would fill in our volume gaps down in that level. Remember, we do have some pretty extreme volume gaps. So this is our volume gap. Now this is, if we go all the way back, this is kind of what it looks like. And our volume gap actually exists from down around 4,000 all the way up to 5,600. But I'm not really that interested in a 5-year volume gap. I'm more interested in the volume gap from the start of this rally back in December. And you can see that that is actually down between this $5,400 all the way up to about $7,600. So again, if we do come down into this 3 peaks in a domed house pattern and we consolidate in this area, it's going to do a great job of filling this in, and that would form a very, very solid base that we could then bounce off of to go up and make our new yearly high. And eventually, if this pattern plays out, it's going to result in a new all-time high. Okay, that's the way this works. It should go to 7,500. It should bounce at around 9 grand, and then consolidate between 5,200 and 7,500 in that area, and then bounce from there. Now, as far as the timeline goes, I didn't draw this to scale, which is unfortunate. I wish I could go back and change it. TradingView doesn't let you do that. But you can see here that I do expect this drop to 5,200. If it happens, I would expect that to happen in August, sometime in August. It shows October on the chart, but it's just poorly scaled. Really, I would expect to see it by the end of August if it's going to happen. Okay, and again, that's a big if. And then the consolidation I would expect to last all the way up through the end of October, possibly early November. And then I would expect, again, if this plays out, I would expect the price to start its new climb in mid-November to late November, kind of like we did in 2017, a really big pump to close out the year. And I think we would go up and make a new yearly high before 2019 is over if this pattern plays out. Okay, so that's kind of where I'm standing at right now in the macro picture. On the smaller time frames, there's a lot of interesting stuff going on. This did fall obviously severely, right? We did have a very large drop from, well, about $642 in about a 10-15 minute window. And right now, there probably are some people getting excited saying, oh gosh, it's already going back up. I don't think this is going back up. I think this is just simply, we got very, very oversold. RSI changes in real time, but if you were watching RSI like I was when this happened, this tail right here actually pushed this RSI down to about 4 or 5, which is just silly oversold. So what you get is you get a lot of traders who are buying on these tails, buying down around this level. 11,200 was an important support. So you get a lot of people who are buying there with the sole intention of selling the dead cat bounce. And that's the reason that the price will often stop during a big drop, consolidate a little bit, and then dump further. Same thing when price goes up. You'll actually get a big pump. You'll often consolidate a little bit, and then you'll pump again. So this could end up doing something like this. Let me just draw it up real quick. Could be that this thing drops like this. This is consolidation, a bear flag, so to speak, and then come over here and do another drop like this. And if you notice where that would put us down around 10.8, which again would fill this CME gap. It's also a very important line of support. Okay, 10.855 is a very important line of support right there. So I do think that in the short term, and again, you can't expect anything with cryptocurrency, you just have to play it by ear, but it looks very possible that we are going to indeed drop further and go down and test this $10,800 area that I talked about a couple of days ago. And then, depending on what happens there, I'll have to make a decision on whether I want to go long or short. It could go either way. As much as I would like to see the three peaks pattern play out, as much as I think there's a lot of reasons to be bearish right now, that 10.8 area is a very strong area of support, and it is very possible that we actually do just go in and fill that gap up and then start to move up again. Me personally, right now, with the way things stand, I'm leaning bearish. I do think we'll go down. I do think we'll fill this gap. I do think we will bounce. Okay, I think we will get rejected, and I think we'll finally go down and fill in this other CME gap down here. That's the way I'm trading this right now. Now that could change at any minute. So if you're watching this video, it doesn't mean that 4 hours from now I'm going to feel exactly the same way. It just depends on what's happening in the charts. Okay, but right now this looks like it's trying to form a bear flag. And if that bear flag plays out according to textbook definition, the next leg should be about the same length as the first leg, and that would be right around 10.8. Okay, so fingers crossed that this thing continues to go my way and continues to go down, so I can continue making money on my shorts, and also so that I can eventually get reloaded up and go long once we've proven that we're ready for the next leg of our bull run. All right. This is James. Please remember, I am literally some guy sitting in a spare bedroom. I am not a financial advisor. I'm not your financial advisor. Nothing in this video is financial advice. You should always do your own due diligence and seek out professional advice before making any type of investment in cryptocurrency. If you enjoyed the video, please be sure and give it a thumbs up and subscribe to the channel. And if you haven't already, check the description. You can find links to follow me on Twitter, TradingView, and also a link to join my free Facebook group. This is James. Trade safe.